They one day go to sell their business after giving food to their friends for free every time they come in. Are they going to sell their business for more or less?
Less.
Less. We are borrowing $30,000 from our life insurance policy to pay for our wedding. Now, what we do in our office is called the infinite banking concept. And it's the concept of becoming your own banker. So you can be this person that takes control of your whole concept, of all of the banking function of your life. So that instead of the bankers and the politicians taking control over your money, you can move your money from the Bank of America to the Bank of, fill in your last name, the Bank of Fellaini, the Bank of Marquez, the Bank of Nash, and be able to put it over here into your own banking system and continue to grow your money, and then you loan it out to yourself. Just like the bank is loaning it out to other people. You loan your money out to yourself so that you can then pay for all the things in your life. And you can go lend it out to your business partners and your business, and you lend out your money to yourself for all the things that you want. It just flips the switch. It's the complete opposite. Now, if you're a consumer in America, is paying high interest good or bad? Bad. It's bad. Right? You don't want to pay high interest. But if you're a banker, is paying high interest good or bad?
Good.
It's good. It's fantastic. So if you could pay high interest to your own bank, would it be good or bad for your bank?
Good.
Good. If you owned a grocery store and you had to go into that grocery store and grab a can of peas off the shelf because you needed to cook some peas tonight, are you typically going to take it out the front door or the back door? What do you want to do? Do you want to take it out the front or the back? You're going to want to take it out the back. I know some of you are looking a little confused. If you owned a store and you had the privilege of stealing from your store, wouldn't you? Because what would you not have to pay if you take it out the back door?
Tax.
Taxes. If you take it out the front door, you have to charge it on your cash register. And that creates more what? Sales. And then as a business owner, you have to pay more what on your sales?
Taxes.
Taxes. So you can avoid the who?
Taxman.
The tax man. You can avoid the IRS if you don't ring it up. Right? If you go to your favorite bar and you know the bartender, what are they going to do?
Pour you a drink.
Pour you a drink. Are they going to ring it up?
Nope.
No.
If your dad owns a Philly cheesesteak spot and you go home for Thanksgiving, what are you going to get a bunch of?
Philly cheesesteaks.
And what is he not going to make you do?
Pay for it.
But what do we secretly do now that this is what we do for a living? We pay for them behind my dad's back. Because he would never let me pay for them. When you go into your friend's restaurant, what are they going to bring you? Free food. They're going to bring you a free appetizer. Hey, this one's on the house. Guess what they didn't do with that food? They didn't bring it into the system. And if they didn't bring it into the system, is their revenue going to be higher or lower?
Lower.
Lower. And their costs for everything are going to be higher or lower? They're going to be higher. And so when they one day go to sell their business after giving food to their friends for free every time they come in, are they going to sell their business for more or less?
Less.
Less. So have they been benefiting themselves or fucking themselves over the whole time? The whole time. And so if you owned a grocery store, are you going to take the peas out the front or the back? You're going to want to take them out the back, but what does Nelson Nash, who's the founder of the infinite banking concept, he says you should take them out the what? And not only should you pay 60 cents like everybody else for the can of peas, but you should pay more. Because if you pay more, what's going to be higher at the end of your tenure of a business owner? Your profit, your valuation, your profit, everything's going to be better. So if you owned a bank and you were running your money through your bank, would you want to charge a low or high interest rate for your own money? High, so that you have more what? Profit for your bank. And so if you start thinking like a banker, you're going to have to do these 5 things. Because we typically go shopping at everyone else's grocery store. We go shopping at everyone else's restaurant. We go put our money in everyone else's bank. But if you flip the switch, you have to follow these 5 rules. Number 1 is you have to think long range, right? Jeff always says we grew up in IG, which is instant gratification, right? And in fact, I think that Instagram was created on purpose for instant gratification, because everybody calls Instagram what? IG or Insta. All right, instant. You want to not be afraid to capitalize your business. What does that mean? If you open up a grocery store, is it better to put more or less money into your store?
More.
More money.
Yes. Yeah. And if you're gonna take keys, are you gonna steal them or not?
No. No.
No. Do not do business with the banks, and to do all of this, you have to rethink your thinking, because we've been seduced into thinking that we're gonna bank from everybody else, and now we bank from ourselves. And so, really, you can use this concept to buy cars, buy your homes. We are borrowing $30,000 from our life insurance policy to pay for our wedding. I'm also going to buy her a car in January when we move offices, all from our life insurance policy. This is something the Rockefellers have done for generations. J.C. Penney, Ray Kroc, Walt Disney. Some of our clients, you might recognize some of them.